US earnings season officially starts next week with reports from the financial sector. JPMorgan, Goldman Sachs, and Wells Fargo all due to report on Wednesday. Justin McQueen from Daily FX is here with us this morning to look at the chart of the S&P 500 ahead of the start of this busy period for corporate reporting. Justin, thanks so much for joining us. As I mentioned, very busy period in terms of earnings season kicking off. What might that mean in terms of a trade for the US index?
Good morning, Victoria. Thank you for having me on. Yes, like you say, earnings season will come back into focus next week with the banks. The banks obviously have had a pretty strong start to the year, up roughly around about sort of 20 to 30% with some of these banks that report in next week. And obviously, there's been a lot of this play in terms of that value momentum that we've been seeing over recent months. And also another beneficiary as well has been, all that talk about rising global bond yields, which has seen the banking stocks one of the major beneficiaries. It is a bit interesting though this week that tech stocks have been driving this latest move higher in the broader indices, and much like was the case throughout the majority of last year, we've started to see a bit of a pullback in global bond yields, which has also benefited the move higher. But I do question whether we are getting a bit of exhaustion at current levels. I mean, in terms of the S&P 500 stocks within the index, roughly around about 92 to 94% above its 200 DMA, which does sort of give an indication as to how much more upside is there really to go. We're starting to see a bit of a pullback on the futures market. But in terms of the earnings next week, of course, JPMorgan, Goldman Sachs, Bank of America are all expected to produce another strong set of earnings. Their recent record has also been pretty strong in terms of JPMorgan beating 7 out of the 8 times on their revenue and EPS forecast. So we are expecting that to provide a little bit more upside, but also as well, it's not just earnings. We do have the inflation data next week. And of course, there's been a lot of talk as to whether this inflation will be transitory or not. Obviously, we won't find that out immediately, but expectations are for the headline to jump up to 2.4%. And while it has been well documented that from the Federal Reserve and other global central banks as well, that inflation spike will be coming, it's one thing expecting it, and there's also another thing seeing it as well. And so if we do get to see these readings coming in quite a bit ahead of expectations, that might provide a bit of cause of concern, and we could see a bit of a pullback. But generally, the mentality over the past year has been this sort of buy the dip. On my chart here, as you can see, and we've had numerous occasions of the index falling, 8, 10, 5%, even throughout this year. We've seen a couple of 5% move lowers, and quickly after we've seen those drops, quickly bought the dip on those. And so this is a sort of mentality that we're going on with the market. If we see another, 5% dip, 6, 7, 8% dip, then I would expect to see those levels bought again in terms of the broader market. But again, in terms of the upside, there is a bit of a cause of concern there. And I wouldn't be surprised to see a bit of a pullback, given just how much we have risen, particularly this week as well, which has also been a relatively lower volume week. So again, those are some points to look out for towards next week.
All right, Justin, thank you so much.
For more videos like these, make sure to follow us on Twitter. We're at IGCom, and you can subscribe to our YouTube channel, IG UK.